My name is Trevor Donnellan. I'm an economist with Teagasc. I work in the economics area looking at the future of the dairy sector. 2015 has been quite a spectacular year for the Irish dairy sector. The quotas were removed at the end of March, leading to quite a spectacular increase in Irish milk production of the order of about 11% this year. So that's one of the main highlights of the year. But on the negative side, there was a dramatic reduction in the price of milk, which fell by about 9 cents per litre relative to 2014. The result of all that has been that even though farmers have delivered more milk this year, they've actually received a smaller milk check. What has that meant for incomes in the end? Well, cost of production didn't change very much in 2015 in terms of the price of the individual inputs. But the capacity to produce more milk at relatively low cost has meant that the average cost of production has declined this year for dairy farmers. But the overall story in the end is still a reduction in average dairy farm income of about €20,000 from the 68,000 figure of 2014 down to about €48,000 in 2015. Now, looking at 2016, we see a further expansion in milk production taking place, possibly of the order of 7%. Which will mean that farmers will again grow their milk production beyond the level they were at a couple of years back. We're talking about a modest increase in milk prices taking place in 2016 of the order of about 5%, possibly less. It's very difficult to call at this point in time. It would be important that milk prices would improve in time for the peak season production in 2016, and we can't be sure whether that will happen or not. On the cost side, we expect very little change in the various input items in terms of their price next year, but again, the capacity to produce more milk will mean, at a relatively low cost, will mean that dairy farmers' cost of production on a per litre basis will fall that little bit more again, which will be a bonus. So looking to next year, we're looking at an improvement in farm income off the back of slightly improved milk prices and the capacity to produce more milk. So a positive year in prospect, the dairy sector continuing to recover out of the slump that it has found itself in the last 15 months, and a slight improvement on income levels in 2015. The difficulties in the dairy market at present that are keeping prices low are to do with both supply and demand. There has been a lot of milk produced globally in the last year or year and a half. That has created a big stockpile of dairy products. Demand has been a little bit suppressed. China in particular hasn't been buying as much milk powder as it would have in 2014, and that has been a problem for the market. So as a result, prices have needed to adjust downwards to try to find some balance between supply and demand. Supply is starting to ease back. The growth in supply globally is starting to ease back. Lower prices mean that the expansion in milk production in New Zealand, for example, has come to a halt. In fact, we expect New Zealand milk production to decline a little bit in the short term. And we are also expecting an improvement in demand from China to take place at some point. Again, very difficult to call when this will happen, but the expectation is that import demand by China will improve. The increase in milk supply that has taken place in Europe this year has been down to the fact that quotas have been removed. There has been about a 1% increase in EU milk production in 2015. Now that reflects a balance of increases in some member states and actually continuing decreases in southern and eastern Europe in particular. So it's not like every EU member state is expanding its milk production. When you look at the US and New Zealand, the other main exporting nations, again, very high price levels and very high profitability in 2014 and in the early months of 2015 created a big supply of milk on international markets. Which was quite a difficult situation for the dairy market to deal with.